You're seeing a lot of upside for tech in Q4. You actually believe that tech can move another 10% in Q4. What's the catalyst?
I mean, look, this is our second trip in Asia in the last 6 weeks. Demand's outstripping supply 15-1. So even though right now it starts with godfather of AI, Jensen NVIDIA, this second, third, fourth derivative, it's just starting to play out in terms of AI. I think that is going to be the catalyst to tech stocks being up 10% plus this year, 20% next year. I think the AI party, still 9 p.m. with the party that doesn't end until 4 a.m.
Why does the party end at 4 a.m.? I mean, I don't even, this metaphor always cracks me up every time you do it. But on a serious note, you're saying demand is up. That's what's going to push the tech sector 10% more in Q4. Demand exactly for what? For chatbots, for chips? I mean, what is the real catalyst here?
I mean, if I look from a chip demand, 15-1 demand to supply. So if you see how it's all playing out, enterprises are lining up in terms of the AI revolution. Now we're just going to start to see the software, the use cases. That's where Messi of AI, Palantir, front and center. You look at names like Oracle, what I believe Salesforce.com, ServiceNow. So now that tidal wave of spend, $1 trillion of AI CapEx is coming to the shores of tech, but to me, in the next 2 to 3 years.
By the way, I interviewed Alex Karp a few weeks ago. We talked about you. We talked about you and some of your notes. He's a fan. He's a fan. I want to get to some more of your note. According to your note, for every dollar spent on NVIDIA chips, there's an $8 to $10 spend in the tech sector. So I want to drill down on that. Is it in the tech sector or is it on AI capabilities? Because we just talked about utilities having their best quarter, since back in 2003. Isn't a lot of this spending on just physical infrastructure? Is that technically tech spending?
Sure. I think 8 to 10 is going to be from software, infrastructure. You talk about the energy piece. It speaks to our view that it's not just about NVIDIA. It's not just about Microsoft. It's now about the multiplier. So what you're going to see really across software, I think the big catalyst going to tech over the next 12, 18 months, numbers are going to go up, I think, 15, 20% across the tech sector. And I think that's why a lot of the bears that are continue being those caves and hibernation modes, they come out talking about valuation. I think streets underestimating growth. That's why, in my opinion, this tech bull market still in the second inning.
I got to be fair, though, Dan. You are one of the biggest bulls when it comes to tech overall. So you're always optimistic, in all fairness.
But let's just talk about scale. Me and you have talked for many years. There have been times where maybe there was some caution, where you could see some risk. But right now, in terms of just fundamentally what we see it across the board, not just in Asia, but around the world. Enterprises are lining up, and I think that's why it's about the next phases now of tech playing out in terms of this AI revolution.
All right, I want to talk about two different ETFs, the IGV, the software ETF, also the CIBR, cybersecurity. Those are two ETFs. A lot of investors I talk to, they say to look at those. Are we going to see these gains you're talking about for the tech sector in these two areas?
Oh, I think that's really front and center, because when you talk about use cases, it's about software, not just on names like Palantir and others, ServiceNow, Salesforce. I think the rest of tech, we'll even look at names like Adobe and others, and then you think about how you're going to protect that. Cybersecurity, that's where names like Zscaler or CrowdStrike. 1995 moment in tech, almost 1996, but it's not a 1999 bubble moment.
So IGV, CIBR, both up about 10% year to date. Where do they finish the year? If you think tech rises another 10%, what about these two specific areas?
15 to 20%. I think these are specifically areas where I think you have just a huge parabolic run into year-end given numbers.
So those two rise another 5%, but the tech sector 10%.
Oh yeah, I think because you're really going to see Mag 7.
Okay.
Big tech's going to continue leading this left lane, going 90 miles an hour.
Tough morning for NVIDIA and some other chip-related stocks this morning. Let's get to Seema Modi talk about what's driving some of these declines. Morning, Seema.
Hey, good morning, Carl. Yeah, headlines tied to China seem to be weighing on shares of NVIDIA, down about 1.5% at this hour. Beijing is reportedly urging its domestic tech companies to stop using NVIDIA chips. This while ByteDance is said to be moving forward with a Huawei chip to build a new artificial intelligence model. It comes as the U.S. Commerce Department is expected to unveil new measures this October that would further limit China's access to U.S. semiconductors, including limits on sales of memory chips. Now, China remains an important market for the U.S. chip makers, and Chinese tech companies are incredibly reliant on NVIDIA, with reports of smuggling NVIDIA's chips in and accessing them through U.S. cloud service providers like Amazon and Microsoft. That's why analysts, including those at Bernstein, say further restrictions would certainly be a headwind for the sector. The SMH ETF coming off 3 weeks of consecutive gains. We've had a positive month, down though right now by about 1.5%.
We're going to start with some semis, which are taking a hit after China has reportedly urged local companies to stay away from NVIDIA's chips. NVIDIA shares are now down about 1%. They were down 3% pre-market. Not a big reaction, Michael, but what would you do with those NVIDIA shares here?
Yeah, we don't care about really what China's doing right now. And I think that the report by Kate was probably as important as anything on the regulation of the AI. NVIDIA is a great company. And for now, they're growing earnings at 40% per year, and they're 40 times earnings. You get a chance to buy NVIDIA on pullbacks because the market is doing the same stupid thing with NVIDIA that the market does with the Fed. They want it to be bigger than it is. They want these great earnings reports to even be better than they are. And when they come in only great and not greater and greater, the market, that stock trades off. So every time there's been an earnings on NVIDIA, you've had an opportunity to buy it at about down 15%. I would wait, but I think it's one you probably want to own for a while. I've got it as a buy. Same thing with the Fed. When they actually do what they say they're going to do, markets get disappointed. I wish markets would listen better.
All right, I hope you're all doing well and staying calm in this market. After being red earlier in today's session, the S&P finished the day up about 0.4%. NVIDIA closed the day nearly flat, and Tesla finished the day up nearly 0.5%. I'm going to talk about NVIDIA in just a moment, but first let me briefly give an update on Tesla. So we are still dealing with this final supply zone before we get a retest of the relative high of $271 per share. This supply zone stretches from $262.10 to $267.30 per share. What this means, practically speaking, is that we are likely to have more difficulty than normal getting through this zone. The next thing I would like to see from Tesla is a close above $267.30 per share. And if that happens, then I think a retest of $271 is more likely than not. The next important event for Tesla is Q3 delivery numbers, which we should get this Wednesday, October 2nd. I think the consensus estimate is around 462,000 vehicles. I'll be honest, I don't know what to expect from this report. Here in the US, I think most people are hesitant to purchase new vehicles right now because interest rates are expected to be much lower a year from now than they are at the current moment. At the same time, because of the current situation in China, we could see a noticeable boost in delivery numbers out of China. I really think this report could go either way. If Tesla trades lower on delivery numbers, then I would be looking for the stock to find a bottom and then trade higher from that bottom the closer we get to October 10th. This is assuming that the rest of the market remains calm during this time. As long as the rest of the market remains calm, and as long as delivery numbers are at least decent, then I think the bullish price action in Tesla should grow stronger the closer we get to the robotaxi event on October 10th. Personally, I am swing trading this setup, and I do not intend to remain in this position through the robotaxi event because I think this could turn out to be a buy the rumor, sell the news type of event. What this means is that traders buy the stock in anticipation ahead of the event. They ride the momentum in the stock leading up to the event, and then they sell their positions right before or right after the event starts. So for me personally, I will likely exit this trade, or at least exit most of my position, before the event on October 10th, just in case. That being said, I am still in this trade right now, and I think Tesla still has more room to run as long as delivery numbers are decent, and as long as the rest of the market remains calm. All right, now regarding NVIDIA. As I've been saying a lot recently, I am bullish on the long-term future of NVIDIA, but I am cautious about adding to NVIDIA between now and early November. There are multiple reasons for this. Due to the upcoming election, I think it is entirely possible that the market could trade lower in the second half of October until November 1st. November 1st would be the Friday before election week. Looking at the SPY's chart back in 2016 and 2020, we can see that the market began trading lower in mid to late October and reached a relative low on the Friday before the election. This year, that would be November 1st. Now bear in mind that in 2020, the market actually traded higher during the first half of October. And so I really don't know what to expect from the market in the first half of October. I think it could go either direction. But once we get to the second half of October, that is when I would seriously be careful because I think the market is likely to trade lower ahead of the election. So that is one reason I'm cautious on NVIDIA in the short term. Another reason I'm cautious is because of the cycle NVIDIA typically moves in between earnings reports. Prior to NVIDIA's last two earnings reports, the stock reached a relative low about 3 to 5 weeks prior to the company's next earnings report. If this pattern were to repeat itself this time, then we could see NVIDIA trade lower until late October/early November. And get this, the timing of when NVIDIA would reach a relative low in its typical cycle and the timing of when the market would reach a relative low prior to the election are lining up with each other. Of course, patterns tend to repeat themselves, but they don't have to, and I could be completely wrong. But given NVIDIA's typical cycle and the market cycle during the last two election cycles, I am cautious about adding to NVIDIA until November 1st, and I think both NVIDIA and the rest of the market could trade lower in mid to late October. During the week of the election and after the election is over, I think it is possible for NVIDIA to trade higher in anticipation of the company's next earnings report due to Micron's great earnings report last week and because Blackwell revenue should start to show up in NVIDIA's next quarter guidance. We're expecting about $3 or $4 billion of Blackwell revenue in Q4. So if NVIDIA guides Q4 Blackwell revenue noticeably higher than $3 or $4 billion, then I think the stock would likely trade higher on that news. Right now, it really all comes down to Blackwell and where the Blackwell platform is in its production ramp. Looking out long term, I am seriously bullish on the future of NVIDIA NVIDIA, and I would not be surprised if this company doubles over the next 2 years given its current growth trajectory and upcoming product cycles. The two main risks I see to this investment over the next 2 years are geopolitics surrounding Taiwan and the possibility of one of the hyperscalers significantly reducing their CapEx spending. With that being said, the hyperscalers have yet to show any signs of reducing their AI-related CapEx spending. And in fact, it appears to be the opposite as the hyperscalers increase their CapEx guidance by billions of dollars in their most recent earnings reports. Regarding Taiwan, I think it would be crazy for China to do anything rash regarding Taiwan because China has yet to develop a chip that rivals NVIDIA's. And I think upwards of 90% of the world's most advanced chips are currently manufactured in Taiwan, and China needs those chips too. So as long as nothing unexpected happens to Taiwan, and as long as the hyperscalers do not significantly reduce their CapEx, then I think NVIDIA should be just fine for at least the next 2 years. In the short term, anything could happen, and NVIDIA can be a volatile stock on any given day. But from a long-term perspective, I think NVIDIA's brightest days are ahead as hyperscalers continue to increase their AI investments. Demand for NVIDIA's products continues to grow, and new product cycles are on the way. At least that's how I see it. With all of that being said, I hope you're all doing well, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.